Good morning. Just powering down some potassium and other radioactive material, aka banana. Good to have you. It's a Thursday. We're going to have that crazy weekless jobless claims. It's the end of the world. What are we going to do? The sky's falling. Yeah, but we already know people have lost their jobs, so I feel bad that for those that have lost their jobs or have lost some of their jobs or that kind of stuff. I feel bad for those that are at risk and those that are sick and worried that they're not going to get a ventilator. So it should not be in vain. It's our sort of duty to do our job, to sit here as currency traders. We work at home all the time anyways, so that's nothing new. And the markets are actually moving very well, so we got to get on with it. And the best thing we can do for ourselves and our families and our friends and our neighbors and everyone else in our community is to make money. Because at least you can leverage money and do some good. If that's what you want to do, if you want to take all your Forex money and buy a bunch of ventilators and give them away, then do it. But it's very hard to do anything when you got nothing. So let's get yours. So let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. So good to see you. Oh, I was outside. It's cool this morning. Cool this morning in Georgia. So we got our weekly jobless claims. That's going to be a doozy. Tomorrow we got non-farm payrolls, my 14th anniversary. Whoop, whoop, 14 years. Whoa, trade non-farm payrolls live. Very cool. So we got that going on. So lots of event risk. But even though there's all this craziness and all these events and all these news releases and all this money being printed, the market is actually trading very, very well. And so I'm going to show you what we've been planning day after day after day. And you'll see it's not that crazy at all. And that's the whole point. It comes down to planning. Someone mentioned fear of missing out yesterday. I'm like, there's no fear of missing out. You have a trade plan. How could you possibly miss something if you have a trade plan? Okay? Sure know what I'm talking about? So, fear of missing out, have a trade plan. So, anyways, we'll go over what we've been planning and all that kind of stuff. And then around the news, I guess we'll pull up some news. I'm just going to bring it up in the background now. Don't let me forget. How is everybody doing? Are you okay? Are you safe? Are you secure? Life is challenging, I know. Well, I'm here for you. If I can help, I'm here for you. So like you guys know, I'm doing the swing trading group in Asia every day. Today, we're doing the swing trading group Thursday at 11 a.m. to set up next week's trades. So I'm putting in many extra hours, many extra hours. And then on top of that, the courses are available in that. So swing.fxbootcamp.com. You know what, Jim? Guess what? The video didn't work. I have audio only. I don't know why. I don't even know why. Why would Zoom even have a feature like that? Like, yeah, I want you to record my entire webinar with like 19 cameras open, but I just want audio only. Like, it's weird. And it's an M4A file? I'm like, what the hell is this? So I think I'm going to ditch Zoom. It just sucks. I don't know. I don't like it. So anyways, I have an audio recording of yesterday, and I don't know why. And the only thing I did different yesterday than every other day is I said, save it in the cloud instead of download it directly, because here's what happens. I spend 2 hours doing the day trading group with you guys, and I pour my heart and soul into it, and it's late at night at the end of the day. Like, I'm tired, right? Then it takes me like 45 minutes to download the file. And then I got to upload it to YouTube. And then it has to render to YouTube. And then once it's done rendering on YouTube, then I got to take the link. Then I got to go to the website. Then I got to open up the website. And then I got to log into the thing. And then I got to add a new video area. Then I got to put the YouTube link into the new video thing. And then I got to drag it to the top. And then I got to save it. And then I'm like, son of a bitch, is it a lot of work? So I'm like, I'm just trying to get it faster and easier, and I paid money for a service to do it automatically, and that doesn't work. And then I'm like, well, maybe my download is slower than maybe the upload, or maybe the new service uses the cloud version, not the download version. And so anyways, it screwed it all up. Whatever. You know what I mean? So I'm trying, brother, but this is difficult times. Shouldn't be that difficult, though. Come on. I can just imagine the programmers at Zoom sitting around the table like, yeah, but what about the people that want an audio recording of their entire webinar, but nothing else? No cameras, no desktop sharing, no chat. Nobody wants any of that. We just want audio only. And we're not even going to make that an MP3. Like, what the hell are you guys thinking over there? But whatever. So, let's go on. Let's get on with it. Don't let me forget about the news. Who's going to ping me around 8:25 a.m.? Anybody? Thank you. Appreciate it. I can get sidetracked. Okay. What has the day trading / swing trading / COVID-19 group been doing all week? This is the worst performing one of them all because Aussie started the week out hot and we were cold traders. So at some point we had this up while everything else was going down. Why is this not drawing? Now my drawing tool is not working. Hang on, let me try this again. Drawing tool is not working. Hang on, let me shut it off. Quit. I wish I could quit you. I wish you worked. All right, we need a new topic while we wait for the drawing tool to boot up. South African liquor stores are closed. What do you think about that? Talk amongst yourselves. Still hasn't booted up. There we go, way over there. All right, let's try this. Let's see if the drawing tool will work. There you go. Cool. So, this is the general theme. So on Sunday, this went up while everything else was going down. So we're like, oh, you got to be careful. And also, if you're a bear, don't sell that one, right? Everything else was kind of looking like it wanted to go down. This one was actually going up, so ignore it. But at some point, by end of Monday or whatever it was, maybe this is Tuesday, I can't remember, whatever. At least there it made a lower low. So if you're a bear, you know for sure that's what to do. So there's your lower high, there's your lower low. Okay. So our trade plan yesterday, okay, was up and down. So let's go into a smaller time frame here, even a 5-minute chart. What was the plan for today? Today's going to be the day. Going to throw up. All right. This was the trade plan where in the day trading group that met last night, we were an up and then a down. Okay. And when we meet, we know we have about a 5-hour window typically for this to rise up and then you sell it. Roger Lugos, go bananas with that alcohol. Yeah. Well, I talked to my local wine guy and wine sales are up 14%. Okay. So, interesting, huh? Interesting. By the way, does this look like chaos, or does this look like something you could have planned out calmly hours in advance? Best of, you'd go to swing.fxbootcamp.com. And right now, because of the crisis, it's a combination of swing trading and day trading. So a couple of you guys are saying calm, but you're hearing like it's the end of the world and the markets are crazy, right? No, they're not. They're not crazy. They're not crazy. I might be crazy, but the markets aren't crazy. So let's carry this out a little further. Yeah. That's why they invented stop losses, right, baby G? For worst case scenarios. You guys remember, like, I don't know if it's in my book. Maybe it's not in my book. It's somewhere else. But I used to describe how my stop loss was only for catastrophic failure. Does anyone know where that is? It's always just been my speech, but I don't know where it comes from. But I used to describe my stop loss being there only for catastrophic failure. My stop loss is in the market in case I have a heart attack and die, and I want to protect my net worth for my wife and my children. Stop loss is necessary. Don't even say it, pure mathematics. Even if you believe it, don't say it here, okay? Oh, is it? Okay. Thank you, guys. Okay, so anyways, the stop loss is in case of something like what Baby G was talking about, where there were some spikes like in that Aussie yen and stuff like that. Okay, there are glitches in the matrix during these times, but generally not. So in that case, like one of the topics we talked about yesterday in the group was you should have a fear of getting knocked out of your beautiful trade plan, but not a fear of losing money. Okay, you understand? So you don't want to jam your stop quick. So that was one of the things we're talking about, right? And this has come up a couple of times in the live group where someone's like, Wayne, I got 100 pips. What do I do? Should I get out? I'm like, well, let's talk about it. And then with some patience and discipline, suddenly the trade is 200 pips. Yeah, there you go. So you want your trade plans to at least get to the next serious challenge by, your opponent, whether they're bulls or bears, right? And so that's kind of one of the things we're talking about and learning. And so if you're in a good trade, you want to stay in the trade. You don't want to jam your stop too quick, because the only way you want to get out of the trade is if you're totally wrong. So anyways, let's get on with it. One of the things we know is if you're a bear, you're going to be challenged at M2. So this was, right? M2 and of course central pivot. So this was our challenge yesterday where we know we're going to be challenged here. We know we're going to be challenged here. We know we're going to be challenged here and here. The difference is the pound has been quite strong lately. And we know we're going to be challenged here. We can talk about it intellectually as it's happening or even before it's happening. It's part of an assumption. What you don't know because again, I'm talking about this as if I'm a bear. Okay? So if I'm a bear, I know I'm going to be challenged there, but what I don't know is how powerful is my challenger. Okay? You understand? Like, there's going to be, like, I think the analogy I used yesterday was an ambush. There's going to be an ambush. Best, you need to pay attention. I'm only going to say it one more time. You go to the website on the World Wide Web using the internet. And you type in swing.fxbootcamp.com. Shekel's on fire. Uh-oh. All right. So we know we're going to be challenged there. We just don't know if they're a serious rival or not. Okay? So we're still thinking bearish, but we know we're going to be challenged. So what are we learning along the way? Well, Euro's been one of the best traders. Okay? Not traders, trades, okay? Because we on a daily basis, there's been some beautiful day trades here, okay? And that one looks like it's breaking, but Euro's fundamentally weak. But you know, fundamentally everything's weak, though, right? Right on, best. See you on the other side. By the way, guys, if you join the swing trading group, we're meeting at 11 a.m. to set up next week's trades. If you like that idea of like, what, you're meeting on a Thursday afternoon to plan out Monday's trades? Yeah, that's right. So if you like that type of trading, pull out a credit card and join. It's less than $10,000. You guys ready to do it again? In fact, it's less than 9,000. It's not even 8,000 or 7. 6,000 would be a great deal. But it's not even 5,000, right? So anyways, right? So we know we got a challenge here. We know we got a challenge here. This is an interesting breach, and this is going the wrong direction. But you have to hurry up. There's only 3 minutes left before the offer expires. So anyways. What did we say yesterday? What does it cost to not join? I thought that was good. The cost of not joining is just simply too great. All right, so let's break this down. No real trend even on a 4-hour chart. Maybe down if you back it out. And this is a lot of time now. Okay, so since the beginning of the year, if you're measuring, you know, it's more bearish than bullish, right? Okay, oops. Cool. So let's now break this down. We're doing top-down analysis, by the way, if you're taking notes. Then step 2, okay, then you go to weekly. What do you think about this? Well, let's go over the last couple of weeks, for example. This bottom predicts this top. How many people agree with that? You've taken the course, you've read the book, something, but you know that to be factual. I do declare. Cool. Sets up a counter trend. Okay. But we'll say this is a weekly high. Based on that entry, this is the target. How many people agree with this one? No, it's not 5 minutes, is it? No, it's close. Thank you. You were always on my mind. Me do degree. Yeah, okay, cool. And go back to this idea, are you a bull or a bear? See, if you know if you're a bull or a bear, the interesting thing is you can find logical, intelligent entries for either side, and you'll probably make money. Now, how much money? Usually depends on the trend, but, you know, like, I can see bullish trades, bearish trades, bullish trades, bearish trades, bullish trades, bullish, right? Bullish trades, bearish trades. So it really comes down to who you are, okay? And what I was saying before is this is clearly support. What? Cool. So anyways, let's drop in and try to see if we could have planned this week out. So again, the day trading and swing trading group met with me Sunday afternoon at 6 p.m. and planned out this entire week. And what did we come up with? Let's see. Top. They were bears. So the trade planning issued up, 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 down, down, sell. 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 What did we do last night? Up, 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 down, down, sell. How did we do? Yeah, I got to go do this news thing. But how did we do in your humble opinion? That's Sunday at 6 p.m. We planned that whole week out. That's how you do it. It's called trading. That's my form of day trading, by the way. Biggie, 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 can't you see? Sometimes your trades just hypnotize me, and I just love your pippin' ways. All right. And what? Hang on. CNBC wants me to pay money? Screw you. Bloomberg Live. Hey, well, I'll just go with Bloomberg Live, man. Birthdays were the worst days. Now I drink champagne when I'm thirsty. Yeah. Wow, something's really killing my internet today. That's terrible. Holy smokes, that's bad. Got to reboot the router, but terrible. Well, Max would be regulated in the Caribbean. That's where it's domiciled. Yeah, Izzy says there's only so much you can fit through a pipe as far as internet, but I pay a lot more than everybody else, so I deserve more.
All the diseases have been taken. I'll take a tax.
Welcome to Bloomberg Daybreak Americas. I'm Alex Steele, just about 30 seconds away from initial jobless claims. Quick check in here on the market, holding around the highs of the session here after the worst start of the second quarter for any quarter for the S&P yesterday since 1928. You are seeing a little move into some riskier currencies as oil continues to grind its way higher as well. Not a lot of movement happening in the Treasury market, as well as the dollar pretty much flat on the day. The dollar indexing right at 99. So as we wait for initial jobless claims, the trade balance also coming out negative 39.9 billion, and the number we're all waiting for, initial jobless claims, wow, coming in at 6.6 million. I think
6.6.
I saw was like 4 and 5
Whoa.
million potentially. So initial jobless claims for last week, 6.6 million people. I'm waiting to see if the week before was revised up, but that number not coming out as of yet. And continuing claims up by about 3 million.
I have a sweater
These
just like
terrible
that.
numbers, and I think that we knew they were going to be terrible. I think it's just a question of
I
how
hate
long,
sweaters with
it winds
sleeves.
up lasting. Oh, here we go. We do have
feel
last
so
week's revised
constrained.
up just a touch to 3.3 million from about 3.28 million. So not a big revision, but a huge jump for this week. Bloomberg's Michael
That's a
McKee,
big number.
with me here, Bloomberg National Economics and Policy Correspondent, as well as David Wilcox, Peterson Institute of International Economics non-resident senior fellow.
Remember, do
David
your
also
job,
served
guys.
as
Do
director
your
of the
job.
Fed's
Come on.
Division of Research and Statistics. So, Mike, if I whistled last week at the number, I'm just like, wow, this week at the number. We knew they were going to be bad. How does this sit?
You did it again. It's as much fun watching your face when these numbers come over as anything else. The highest forecast
Well, that's insulting.
was for 6.5 million. So this blows away even the forecasts. Almost 6.7 million this week, and then the revision last week. It just goes to point out how bad this is for the overall U.S. economy. We were at something like 210.
I'd like to know what percentage
now,
of it is
nine
blue collar
million
versus white collar.
unemployed people to the unemployment rolls, and
Is this all
1 million
Supercuts and
is
Applebee's laying people off?
We've gone from maybe 3.8% to somewhere around 10% unemployment right now. Now that won't show up on Friday because the numbers are based on the first part of the month. But we're looking at some really scary numbers going forward.
Yeah, that's a little off, eh, Izzy?
With a new forecast, just
a little
short
bit of a
while ago,
faux
they
pas.
think we're going to see contraction into the third quarter, and they think we'll get up to 15.9% unemployment. So things are looking pretty bad with these numbers. One thing we don't have yet, because all this comes out very slowly, is the
I think
state-
YouTube is lagging,
state
by the way.
breakdown, to see where the biggest.
I mean, it looks like might even be
increases
lagging
are.
like a
Remember,
full
last week we
minute.
didn't have the biggest increases in California and New York that people were expecting. Pennsylvania was the leader. So
Yeah, I
maybe
think so
it's a
too,
lot of
Carlitos.
catch-up from last week.
Oh, look.
Well, no doubt. And also we've heard things about like websites going down, people not being able to register, so it could be even worse than we're actually seeing. David Wilcox, what's your initial reaction to these initial jobs?
So remember, you're probably
6.6
buying yen, you're
million.
probably buying dollar, you're probably looking at Swiss franc.
It's difficult to fathom just how unprecedented.
Standard operating procedures, guys. We do this every day, day after day after day after day after day after day after day. Should be no surprises.
This week, total nearly 10 million initial claims in just 2 weeks.
Baby G's already nailed it.
Starting in September 2008, just as the U.S. economy was entering the worst phase of the financial crisis and the Great Depression, it took about 19 weeks for that many claims to be filed. So quite literally, as many have observed, these numbers are just plain off the charts.
So, David, can you just help me understand the logistics of how initial jobless claims feed through, say, to the unemployment rate? Obviously, it won't be reflected.
See, I was thinking about it like
when comes-
last
when we wind up getting the report in
crisis,
May. What's
a lot of
the-
people that lost jobs were white collar
multiplier effect?
and construction.
There isn't an
But if you wanted a job, you can go to Starbucks or Applebee's and get a job, right?
entirely different system.
Now it's kind of the other way around.
Statistics will report tomorrow.
Like Google's still making, Google employees are still getting making money, right?
Pay periods centering around the 12th of March. So as Mike noted, that's too early really to show the hemorrhaging that is reflected in last week's claims number and this morning's claims number. Separately, there's a survey of households that generates the unemployment rate figure, and again, that those data were collected.
Oh, there's going to be a lot of interest in non-farm payrolls.
The complete scale of the devastation that's happening right now. We're going to need to wait another month for that to happen.
And Mike, you talked to Boston Fed President Eric Rosengren yesterday, and he said, unemployment rate.
Yeah,
could be
here's
10%, and
here's the skill and talent, right,
and
Carlos?
actually,
Open your
some
laptop,
are
make
optimistic
money.
are on the lower end of the ranges that we could actually see for you.
These are
Bank of
fantastic
America
trading
was
conditions.
15.9, but you've got others. Jim Bullard was talking about 30%. at some point. And when we talked to him this week, he said it still seems reasonable. So somewhere in that range, but you're getting to a number now that it doesn't really matter what the actual number is. They are so staggering, and it's coming so fast that the damage to the economy is going to be so great
Max,
in the short run.
Max, come on, dude. Max, you've been coming to these webinars for long enough. You should know this,
Basically,
Max.
Ethan Harris and his
But
team are saying this is
risk
going to be the
off
worst
creates
recession
dollar
in
strength.
American history.
Come on,
And you
man.
get into the question of, well, what's the difference between a recession and a
You should know
depression?
that, Max. You should know that.
It may not
So
last
don't get all
long enough
pissed
that
off
people
at me.
may
Just
think
say,
there's a
okay, well,
depression.
why
Those
don't you
are
know that
indicative numbers that
and start doing
that
some
fit
research on it.
Yeah,
Okay.
unbelievable. And I just feel getting downgrade after
So
downgrade.
I'm not belittling
downgrade
you. I'm
banks
trying
and
to
economists
entice you
looking
to
at
you
the
get
latest.
to
So,
know that. You've been.
David Wilcox,
You should know that.
the
That's all I'm
Fed
saying.
is
You should know that.
committed. The government is committed to sort of helping and stepping in. People are going to get checks cut to them. You're going to have unemployment benefits are going to be increased by $600. In your models and calculations, is any of this going to be enough?
Oh, it'll provide
Unless, Max, you've been double dipping and you've been going to some other guru's webinar, then he's probably telling you the opposite.
right now.
And that's probably a confusion if you're doing that.
Time, though. Just last Friday, the president signed into law the largest emergency spending bill in U.S. history. And this morning's claims numbers underscore once again how badly American households need the financial support that will be provided in that bill. But getting the money out that's provided in that bill is...
So think of it this way, Max.
there are four
Let's
main
say
sources
6 months
of
ago,
financial support.
I was a risk-on guy. And I said, I'm sick of paying too much for an American stock. All right? Yeah, we'll fire the other guy, Max. Seriously. Like, this, if you're learning that the dollar should be weak with this news, it's wrong. So, anyways, think of it this way. Let me try to explain it. 6 months ago, I'm making tons of money in the stock market. The stock market can only go up. I'm just killing it everywhere. I'm filthy stinking rich. And I say, well, you know what? I just made a ton of money on Apple doubling, but I can't really buy more Apple, especially at this price. So I take some money off the table, and I got money to play with, money to burn. I say, well, you know what? I need to risk this money because it's like free money. Apple doubled, and now I got all this money. I mean, it's like free money, right? So I want to go for it. I want to get a good return. I'm willing to take some risk with this money because this ain't my retirement money. This is my risk capital now, right? I'm playing with the bank's money kind of thing. So I got this money I made on Apple. Great. And I say, you know what? I want to kill it. I want to give it to Turkey. And Turkey's going to pay me 10% times my leverage. So I'm going to make 1,000% a year. So I give it to Turkey. I give not my Apple stock because I sold that, converted my Apple stock, or at least some of my Apple stock, into cash. So now I got US dollars. And I'm so rich now because I've had a 10-year bull run that I'm like, you know what? I don't want to buy more Apple stock. It's too expensive. So you know what? I'll give it to Turkey, and Turkey's going to pay me 1,000% a year when you include my leverage. Is that behavior risk on or risk off? Yeah, I know, Max. But anyways, answer the question. Risk on or risk off? Is that behavior? We're talking about behavioral finance. And by the way, your textbooks are wrong. So your guru might have actually taken a macroeconomics class. The thing is, he doesn't know anything. He took a class. He's not an expert. All right, cool. Okay, it's risk on. Then I find out the whole world is going to fall into a zombie apocalypse crisis. What do I do? I say, you know what? Give me my money back. Okay? Well, that's, yeah. Alejandro says, what if Turkey doesn't give back? Well, that's why you get paid 11% or 10%, right? Anyways, you say, you know what? Oh my God, everything's crashing. Everything's crashing. Give me my money back. So look at the emerging markets since the pandemic began. South Africa is being crushed. Turkey's being crushed, right? And you can see that. The reason it's risk off, Americans are bringing their money home. They're like, you know what? I'm not even interested in the 1,000%. I just want my money back. So that Turkish lira trade gets converted back into dollars because you bring your dollars home and the value of the dollar goes up. You see, the value of the dollar goes up when things are bad. In reverse, the dollar gets weak when Americans are filthy, stinking rich. Okay? And because of trade, you know, you can get somebody in, I don't know, Vietnam to work cheaper than an American will work for. So money goes to Vietnam and the dollar gets weak. Okay? Nike shoes. I want to buy Nike shoes. They're awesome. They're only $200. And they're only $200 because they have a bunch of Vietnamese people working in a factory as slave labor. Okay, cool. So the dollar gets weak because I'm sending money to the factory owner in Vietnam. And in exchange, I get beautiful shoes that make me feel like I'm floating on air. Okay? So when things are good, dollar's weak. When things are bad, dollar's strong. Simple behavioral finance, but it's true. If you got a textbook from a university, they're not going to tell you that. They'll tell you the opposite of that. And it's really too bad, but... Right? The market is my educator. I learned more from trading Forex about economics and finance than Harvard taught me. And by the way, I have a graduate certificate in finance, right? So, anyways, what were we going to do? I guess we could do the exotics, and I'll just show you. And it's generally been up since the pandemic. Here's the beginning of March. Dollar strong, Turkish lira weak. Mexican peso. Okay, since the beginning of March, dollar strong, peso weak. And here's Rand. Since February and March, here's when the pandemic hit. Up, right? Look at this, guys. Let me teach you how to trade. You ready? Set. 21.55 cross, you buy. Let it run. Or you can go with price action. Up, down, down, buy. Up, down, down, buy. Up, down, down, buy. Up, down, 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 buy. Up, down, 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 buy. Up, down, down, buy. Up, down, down, buy. Up, down, down, buy. Up, down, 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 buy. Up, down, down, buy. Up, down, down, buy. Up. Hey, it was a good start to the year, brother. Sucks if you live in South Africa, though. Hey, guys. So South Africa is suffering through this. Is inflation going to go up in South Africa or go down? Sorry, Reb. If it was insensitive, I apologize. Yeah, so it's funny. Things are going to get bad in South Africa. And the government's going to have to take over. The government's going to have to create money to... Okay? And the opposite is true. the benefit, okay, how about this? The benefit to being a reserve currency is all your debt is in your own currency. Meaning the US dollar or the American debt is priced in dollars. So what do you do if your debt is, let's say, $1 trillion and you don't have $1 trillion? Well, you just print a bunch of money and you give the person or whoever you owe the $1 trillion to, you're like, all right, here's your $1 trillion back. But the thing is, the purchasing power of those dollars are much lower, so you paid them back with cheap dollars. So it actually benefits the United States to print money when there's too much debt. Because if they print money, then in dollar terms, it's still $1 trillion. In purchasing power, so for example, how much does a barrel of oil change if price drops from $100 to $50? How much has the oil changed? Nothing. It's the exact same barrel of oil. So what's changed? The dollar is one way of looking at it, what you're receiving for it, right? So what I'm trying to get to is South Africa has to borrow money or they have to print money. Either way, it creates inflation. No, high inflation will lead to higher interest rates. South Africa is going to have to convince people to loan them money when nobody wants to loan money. So how do you do it? I'm what do you call those guys? I'm a loan shark, let's say, okay? Welcome to loanshark.com. You've lost your job, you haven't worked in weeks, your children are about to starve to death, and you're about to be thrown out onto the street, and you're desperate for money. So you come to me at loanshark.com. And you're like, dude, I need some money, just lend it to me short term, I think I can make it up. And I'm like, no. What are you going to have to do to convince me? There's nothing you can do to convince me as far as changing your situation. So you have to change your offer, right? So what do? Absolutely, I do. That's part of the business, Carlito. What are you going to have to do, guys, to change your offer? You need to borrow from me. Your children are starving. You're going to be kicked out onto the street. Collateral, maybe. You don't have any collateral, otherwise you wouldn't be in this situation. Yeah, you're going to have to offer me more. I'll pay you 10%. No. I'll pay you 15%. No. Pay you 20. Okay. That's what South Africa is going to have to do. That's what Turkey's going to have to do. That's it. You pay me more, it lowers my risk. Are they really worth that much? So, you see what I mean? So the funny thing is, this whole time, the U.S. has been clobbered, and now we're getting millions and millions and millions and millions of people out of work. And you've been taught by your other guru on your other YouTube channel that the dollar's supposed to weaken because of the bad news. Stupid. It's just dumb. They have no idea what they're talking about. They have no background in macroeconomics, central banking policy, monetary policy. Okay? They just don't get it. Sorry. Maybe they learned macroeconomics from a senior economist at the Fed. Oh, no, wait, that was me. Hey, you got to throw that down, man. It happened. Man, if you don't leverage that, then you're not doing it right. Oh, I'm sorry. Did you learn macroeconomics from the Fed? Oh, you didn't? Oh, that explains things. Oh man, you got to leverage that. All right, cool. So there you go. You just learned, right? Oh yeah, but you get the yellow Lambo, huh? Okay. Yeah, ruble's probably getting crushed, but more on oil. But Daniel D, double D, you should be watching I suppose OPEC on that one. Yeah, right? Pure mathematics. It's not bad, right? Like, especially if you're raising money, they're like, well, we like your track record, but, how do we know you? You say, well, as an ex-supermodel, it's known that I'm a hard worker and I pay attention to detail. Okay. Oh, and I went to this thing called Harvard, all right? And it works. That's why you do it. All right, so I just explained to you why all of these are going to come down. Then the news came out, and look, CAD yen, down. Euro yen, down. Even pound yen, down, but we're skipping that one right now because the pound's been terribly strong. Kiwi yen, down. Okay. And Aussie, down. Look at this, guys. We've had this all planned since Sunday. I know you get sick of it when I tell you, but all of these are planned days and days and days in advance. So if you were logging in every day going, hey, I wonder what we're going to do. What's going on? Are we buying in New York today? Like, whoa, 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 you're going to get your butt kicked. Yeah, scripted, right? Blood night. Okay? Sick of it. You guys are sick of it. This guy's a broken record. When are you going to change your behavior? That's the big question, right? I hope you do. I want you to succeed. I hope you understand that. Focus says, hey, what about, if oil goes up, what about these, all commodity currencies should go up too? No, that's if you're doing a supply-demand macroeconomic play. That's not what's going on. Oil being at $20 is not a macroeconomic scenario. That's not an equilibrium price. That is an artificial price in the middle of a price war. There is no demand for energy right now, and Saudi Arabia is pumping out 12 million barrels a day. Back when things were looking good, they were only doing 8 and 9 million a day. They jacked it up to $12 million or 12 million barrels a day, and there's no need for it. There's actually we're actually nearing the point where there is no more storage available anywhere on the planet. And nobody wants the stuff anyways. Yeah, I know, Reb, right? 10 pips every day. I'd just say, well, do the math, bust out a spreadsheet, do a pro forma cash flow statement, and show me how that works out. And it just doesn't make any logical sense that 10 pips a day adds up to anything. The only way you could do it is if you're extremely over leveraged. And we also know that is a guaranteed path to failure. Like, it just doesn't even make sense. The argument is like silly. Right? Think of it. One standard lot, how much are you making? $100? $100. Can't live on $100. What are you talking about, $100? Just doesn't make sense. And what's your stop loss? 3 pips? Like, think of it that way. Like, one of the things we do all the time in the swing trading group is, or I guess it's more of the day trading stuff, but we talk about, like, would you risk 33 for 99? Would you risk 100 for 300? Well, we know 100 is way more than enough, but we are consistently targeting 300 pip trades. Those are more swing trades, but like 99 is usually not enough. Like 99, only 99 pips, we kind of chuckle about it. Like, really? Oh, mediocre trade. But the thing is, the risk-reward ratio is at least 3 to 1, sometimes 5 to 1. And very often in these market conditions, 5 to 1. So if you're going for 10 pips, where's your stop? 3 pips away? But dude, your spread is like 3 pips. Like, you can't even do the numbers. Like, it's so illogical. And so you made 10 pips with one standard lot. You made $100. I don't know anybody that can live on $100 a day. So you're going to need 10 standard lots on your scalping. So you're going to have to put $1 million in every single trade so you can live on 20 grand. But what kind of capital do you need for that? Like, it doesn't make sense in any way you slice it. It's just really funny. But I'll tell you, like, newer traders come in and they're so focused on losing money, meaning like they're so scared of losing money that they keep their stops close and they're so eager to turn a profit. Like, oh my God, I got 10 pips, or oh my God, I got 50 pips, or oh my God, I got 100 pips, I have to get out. And it's such backwards thinking, and I really have to change it, because, like, why would you get out of a trade that's working? You got 100 pips, but like the market doesn't care about your 100 pips. But what you have is a proven trade, and most likely you're in a trend. Like, why don't you just remove your risk, and next time there's a pullback in your successfully identified trend, add a second one, add a third one. Right? Don't be so eager to get out. It's just so, it's funny if you do the math, and of course most people won't do the math, right? Because, you know, if you're chasing your yellow Lamborghini vision, you probably are incapable of doing the math, right? Because you're not like, what? So if you do the math, you're like, wow, this doesn't make any sense at all. And you're like, so what does make sense? Well, what are the universal truths? You buy low and you sell high. The trend is your friend. You keep your stops small, right? You keep your losses small, and you let your winners run. How many people agree with all of those statements? Oh, I haven't looked at mine in, oh my God, 20 years. Okay? And then ask yourself, these other guys you run into on YouTube or whatever, are they following those basic universal truths that everybody knows about? Do they buy low? Do they sell high? Are they doing that in the direction of a trend? Do they keep their losses small, and do they let their winners run? And I bet you more often than not, maybe every time, you'll find that they lack at least one of those, and that means it doesn't work. Okay? You have to have all of those. If you skip one of those, it'll just take you longer to die. You'll have that Die Hard t-shirt on, right? Yeah. Yeah, the orange, like the titanium orange one. I forget what Lamborghini calls that one. That one's pretty hot, but I wouldn't do that. Yeah. Stuck on 1 minute charts with huge lot sizes. Yeah. Guaranteed death. Guaranteed failure. And then look at this. We can just casually price out the whole week, right? Dozens and dozens of people in the swing trading group plan out the whole week, right? 8, 9 trades. They're all going 3, 4, 500 pips per trade. Boring. Now, Swissy actually has been fighting us this week, so I want to follow up with Swissy. Okay, here's the euro dollar thing. So we did this on Sunday, guys. This orange stuff I drew here, I did that on Sunday. Okay, the original entry is right here, guys. So even on euro dollar, we're selling this at 111.50, and we're now at almost 108.50, right? So that's almost 300. This is about 250 pips in profit since Sunday. Very casual trade. Cool, but I wanted to get on the Swissy. The Swissy has been fighting us this week, and you can see it's not quite right. And we kind of felt like that on Sunday too, and it's amazing that it just didn't roll. So Swissy is not as strong as it should be. So that's interesting. Because sometimes I look at the Swissy a little bit like you should look at like the bond market, right? So we'll see. It's not showing me that it's going to do this. It's not showing me this, but this is what I want it to do. I would have expected something like this week and clearly didn't get it. Now, a lot of these trades didn't happen right away. They took 1 or 2 days to kind of giddy up. But yeah, so we walked away from the Swiss franc fairly early into the week because it just never quite set up technically. Now, I wanted it to go down, but we just didn't get the setup, which is the problem, right? So here's what I planned. See the plan? The open, the gap filled down, and it just never happened. So we just didn't get a setup, and you walk away kind of disappointed. So for some reason, Swissy's lagging this week. It's interesting. Well, the bond market is smart money. Stock market is dumb money. The stock market's dumb money. I'm just sick of these professional money managers at big firms. They're El Lamo. Almost criminally negligent. But the bond market's smart money because it's big money. And by bonds, I'm also including treasuries. And if you think about banks doing Fed funds lending to each other, doing repo, all these things are big, smart, intelligent money. They know what's going on. And they're hyper focused on the short term. So they really know what's going on. So if you're watching, if you're watching yields shift, then you know if the markets are buying or selling. You can look at spreads between the 2 and the 5, or the 2 and the 10, and the 10 and the 30, and you can kind of see where money is going. Is it long term? Is it short term? Where's the move happening? Does it steepen the curve? Does it flatten the curve? Is the curve inverted, and all this kind of stuff? It's very useful information. And like Swiss franc not being risk off this week is a question mark, right? And that's why I kind of backed off that one pretty quick. So we focused on dollar getting strong and on Japanese yen getting strong this week. Okay. Okay. So pound was unusually strong at the beginning of the week, so I was cautionary on that one as well. But sometimes you got to be patient, right? So at the beginning of the week, Aussie and Kiwi were strong. So what is this? Thursday, Wednesday, Tuesday, Monday. So anyways, we started here as bears. Can anybody confirm this from the group? Who can confirm from the day trading and swing trading group that on Sunday we had Kiwi dollar coming down? Paul, it's more affected by silver than by gold. Carlos, that's not true at all. If all of Europe shuts down and stops buying from Switzerland, Switzerland's in a world of hurt. Not even the virus, I'm saying economic. Okay, 1, 2 confirmations, 3, 4, 5. Okay, there is a bit of a lag, about a minute. Anyways, there at, and then how do you follow this up? Down, 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 up, up, sell in the pink zone, down, 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 up, sell in the pink zone, down, 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 up, sell in the pink zone, and we're on our down, down, down. 1, 2, 3, 4 days in a row. Winner, winner, chicken dinner. So how you do it, boy? So selling off of 60.50. And it hasn't moved that much. We're only at, I can't even see that, 59. So it's not even that much pips, but that's just what it gave. Okay? Just what it gave. What can I do? The market tells you how profitable you're going to be. Oh, is that right, Mr. Ivo? Where did it get stopped out? What? Yeah, no, that's not the right place, Mr. Hivel. Keep it above these zones. Okay? Like if this one, no, but see, this is an entry, not an exit. So this going up higher, right, it would knock this one out if it went higher than that. So, no, you got to trail it off of, so like on Sunday, right? On Sunday, your stop would have been up here if you sold here. Then you get a lower low, right? So that's Sunday, Monday, lower low, lower high, Tuesday. So now you put another sell here, right? And your stop is way up here. Down, 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 right? Up, up. So now you're going to sell in this zone, which means your stop's up here. But now you can move this one down. You can move this one. So maybe you got 3 here. Down, 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 up, up. This is your sell zone. So you're going to sell this. Okay. You're going to sell there. Your stop's going to be here. So now you move this one, and this one to there. Okay. And went a little higher, but it shouldn't affect anything. Down, 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 down. And if it makes a new lower low, Okay. Now your next trade is going to be like this, and these stops are going to be moved just above this. So now you got 4 stops right here, and this one goes down, and then if it makes a new lower high, lower low, then once again you move your stops. Okay. Okay. So maybe you're moving them a little too quickly. So, Mr. Highvolt, maybe do one version of your trading on demo accounts, right? Like, how about do a 150 pip trailing stop? Now, not on Kiwi dollar because it doesn't move that much, but on Euro Yen, for example, if you sold at the top of a market and you had a stop loss trailing at 150 pips, do you stay in longer and are you more profitable? And then, of course, you wouldn't just trail it forever. You would trail it until you hit obvious support and then you bail. Right? Like the monthly target. Right? Something like that. Well, this goes back to our conversation yesterday even, right? Where we talked about your fear should be that you get knocked out of your trade. And I think that's exactly it, right? That, like, we're talking now specifically about your trade, but we talked about that yesterday. Your fear shouldn't be about losing money. Who cares about losing money? Most of the time you make money, and your winners are way bigger than your losers, so who cares about a loss? It doesn't happen that much, and it's not that big of a deal. So your fear should be prematurely being knocked out of a good trade and leaving 500 pips on the table. Your fear should be giving up a 500 pip opportunity that you've already planned and deserved because you did the work. Right? That's your fear of not hitting that and getting the opportunity that you planned out. Losing 50 or 100 pips, who cares? Right? Make that back in half of a trade. So anyways. Oh, Robert opened a Trader's Way account? Well, welcome to the family. Cool. What else is going on? Aussie started the week strong. Rolled over. Now it's doing what it's supposed to be doing. Down, 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 up, up, sell, down, 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 up, sell, down, 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 down. Guess what's going to happen tomorrow? Up, sell, down, 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 down. Okay? You have to be a rocket surgeon to understand that though, right? I only worked at NASA for 2 summers. One of the most interesting jobs I've ever had though, actually. All right. Okay, this is supposed to be going up. Well, the thing is, what would it matter? Think of it this way, non-farm payrolls. Do you think it would matter if it came out negative 150 or negative 300? Do you think the market would move differently? Or is it just bad? Hey, Maurice, good job. 1,200 pip profit. Very good. And you got another 800 in the bank? Sweet. 2,000 pips. That's pretty legit, huh? What made the difference, Maurice? Well, Reb, that's exactly. But I preach both those things every single day for 20 years. Lower your leverage, focus on planning trades, not trading. No. Yeah. Yeah, well, okay, thank you. Thank you for the kind words. But what did I teach you specifically that made the difference from you losing money to you making not even money, pips, right? Like it's the number of pips. You're like, I made $10,000 yesterday on how many on how many pips? 10. You're like, okay, you're stupid. Or you made 10,000 yesterday and like, all right, how many pips? 1,000 pips. Wow, really? You made 1,000 pips yesterday? Yeah, it was an amazing day. And I caught it and I wrote it and I added to it and it was killer. I crushed it. Oh, good job. Right? Plan, indicator, risk on, risk off. All right. So just, I mean, really just proper trading, right? Very cool. Well, the trade plan on this, guys, is very obvious. Okay? Okay? It just hasn't worked out. But again, on Sunday, again, I'm not even talking Monday, guys. Sunday, we had this going up. And that's the print symbol, isn't it? Anyways, that's what we had. So on Sunday, we would have talked about something like up, 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 down, down, up, 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 down, down, up, 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 down, down. And it just hasn't worked very well, surprisingly. Okay. So that's that. All right, I'm going to call it a day. Remember, if you join my swing trading group, swing.fxbootcamp.com, we are meeting in about 90 minutes. And we're setting up trades for all of next week. Okay? If you have any questions, there's probably 20 or 30 people in this room that are members. Maybe they can answer. So if you want, I can just hang around a little bit in the office. I'll keep the video running. And you guys can chat for a little while, and then I'll pull the plug. What do you think about that? You guys in favor of that? Just trying to find, guess we lost Bloomberg. Tricky's up 300 quid. Thanks for these brilliant lessons. Awesome. Yeah, don't forget, tomorrow I do non-farm payrolls live. It's my 14th anniversary of that one webinar. So we're doing swing trading at 11, but there's no need to meet in the Asian session prior to a non-farm payrolls. So no, we're not going to meet this tomorrow morning, if you will. The morning before non-farm payrolls is just silly. But we are going to do today, right? How do you join the swing trading group? Uh, If you join, do you get access to the lectures? You get the entire swing trading video course, and you get the day trading video course. Mr. Highvolt, I don't know if you want people that are not in the swing trading group in that. Baby G, that's just too much risk. We're not interested in that kind of risk. You can do it, but there's no need. So a lot of us hit targets already. So our concern last night was people were already hitting weekly goals on Wednesday night. Several of the traders were already done for the week. So you're like, you didn't need Thursday, and you certainly don't need non-farm payrolls Friday. So just pick it up again on Monday. You see what I mean?
From New York City for our audience worldwide, good morning, good morning. We are 8 minutes away from the opening bell. Let's get some morning calls. I used to refer to this segment as the...
All right, I'm going to mute my mic, but hopefully you still hear Bloomberg in the background.
Home office from Wall Street analysts. This is what they've got to say this morning. Bank of America upgrading Western Union by 2 notches, raising shares to a buy with a $23 price target. The analyst saying headwinds from the coronavirus will be temporary. Next up, Morgan Stanley upgrading Bristol Myers to overweight, a $64 price target. The analyst citing the company's improving valuation and pipeline. And finally, Guggenheim upgrading Fox to a buy with a $29 price target. Analyst Michael Morris writing, it's the best positioned media company in a stable consumer environment. That's 3 of the calls from the street. Let's get you a call from Wall Street for the equity market, shall we? At the index level, I'm pleased to say Julian Emmanuel of BTIG joins us now, phoning in. Julian, always great to get your thoughts. 7 minutes out from this opening bell, with equities rolling over, down 11 points, nothing too dramatic, but a series of losses on the tape over the last 3 days or so, Julian. There is something that people say continually on programs like this. Will we or won't we retest the lows? What are your thoughts on that situation at the moment, Julian?
We actually think that at some point in April you will retest the lows. What we're calling it is a divergent retest, where if you look at the index low around 2191 in the S&P 500, we think a number of indices, a number of stocks will make new lows, but others won't. That's the kind of thing that we're looking for, and it's incredibly painful as the data is today. The way that you can tell when markets start to bottom, and we don't see that concrete yet, is when you get bad news and the market ceases reacting negatively to it. We are not there yet, and today will certainly be a challenge in that regard.
Julian, would you acknowledge...
So what do you think now, huh? Did the euro dollar fall like I said? That's the dollar getting strong on bad news.
Now, that may not hold true
Told ya.
on a morning where equity futures have gapped lower off the back of initial jobless claims, but does that hold true more broadly over the last several weeks for you, Julian?
No, I actually wouldn't agree with that, because I think what you have to think about, John, is that bear markets have their own very distinct rhythm. So if you look back to last week, we had gotten so incredibly oversold that when you got the first piece of bad news on last week's unemployment claims, which was very, very negative, the market was so oversold that literally it couldn't go down anymore. But we spent those days basically resolving the oversold condition. You got through quarter end rebalance, which was presumably the buy. And now, again, from our point of view, the course of travel over the next several weeks, again, as the news is pretty dour, is likely down. But we still haven't seen that inflection point where a numbness sets in, and that's something we'll be looking for.
Julian, in the 20 seconds that I have left with you, obviously, if we could tell when we'd see the bottom in crude, the wides in credit spreads, and the peak in the VIX, that would be gold dust for people operating in this market. I want to identify with you the things that you look for in equity volatility to look for signs of emerging stabilization. Do you identify any of that at the moment, Julian?
Yeah, we're very focused on this 50 level in the VIX. Essentially, when the market looked better several days ago coming into quarter end, you got very close to 50. We'd like to see a sustained move below 50. We'd also like to see the VIX, the S&P 500 VIX, trade below the NASDAQ VIX. It's usually less volatile than the NASDAQ index, and that would be a sign that systemic hedging would be decreasing. That would make us feel more positive.
Hey, Julian, it's always great to catch up with you. I'm always happier after speaking to you. Julian Emmanuel of BTIG, my best to you and the whole of the family, as always, Julian. Around about 4 minutes away from the opening bell in New York City this morning. Good morning to you all. Here is your Thursday morning price action. Your initial jobless claims number, much, much higher than many people expected. Tomorrow will be non-farm payrolls, but as many people have told you already this morning, a payrolls number that looks pretty dated already. Up next is the opening bell from New York. This is Bloomberg TV.
Yet another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
In San Francisco, a lot of tech action today.
Our top stories this morning in D.C. and
The Dow and the S&P.
Shall we? So the euro on a 7-day
sizable moves in the currency market, averages down 0.5%.
We begin in the oil patch. Saudi Arabia.
Brent crude pretty much unchanged.
Welcome to Bloomberg, the first word Asia.
The U.S. and Japan duke it out over exchange.
China's slumping onshore bond market is
From New York City on this Thursday morning, fantastic to be with you as we approach the opening bell in New York City. Here is the price action, a state of play, cross-asset worldwide. Equity futures gapping lower post initial jobless claims, then dipping a little bit higher again going into the cash open. Equity futures almost unchanged, but the range really quite big going into the opening bell. Highs up of 2.21% at one point overnight and into this morning, and down almost 1 percentage point going into the opening bell. That's the equity market. In the bond market, treasuries set up as follows. Yields are grinding a little bit higher by not even a basis point on a 10-year after yesterday's move lower by 8 or 9 basis points to 0.58%. And in foreign exchange, the euro set up as follows. The euro coming in almost 1% now. That dollar strength is back in a big way after seeing some dollar weakness through much of last week. The oil market is where some of the headlines are. Some big gains for some of the oil majors over in Europe. BP, Shell on the FTSE 100 getting a really nice bid off the back of a rebound in crude. That was Bloomberg's Anne-Marie has pointed out repeatedly overnight and into this morning. That move in the context of a massive move lower through Q1. Let's take a little look a little further. Let's bring in Bloomberg's Anne-Marie. Hey, Anne-Marie.
Hey, John. Yeah, that's exactly right. You have to put this move in perspective. It's a massive percentage move, but really we're talking about $1 or $2 on the price of oil. And this is really given to the fact we're getting today due to the fact that China is looking to build up supplies in their emergency reserve. They're the biggest importer. It's certainly going to help the market, but traders say it's not going to get rid of our glut. There you can see at the bottom of the screen there, all of them, all the majors are up as well as some of the drillers, Exxon, Chevron, Devon, Schlumberger, they are all higher today. Jonathan, as you said, Royal Dutch Shell over in the UK up nearly 9% today. Total up more than 4% today. The whole reason why the Europe's benchmark stock 600 is even higher is because of the energy sector. President Donald Trump is going to be sitting down tomorrow with some of these executives to discuss the glut and discuss what it's doing to some of these U.S. companies, Jonathan.
Anne-Marie, on the latest in the price action, cross-asset worldwide with a specific look on what's happening in energy. For the broader market, 2 minutes into the session, your equity market set up as follows. Totally unchanged on the S&P 500. There is so much drama to discuss, but right now the index, the price action is quite muted in the moment, but more broadly, the price range of the last day or so still very wide and very choppy. Let's bring in Chris Harvey of Wells Fargo, shall we? A good friend of this program over the years. Chris, always great to get your thoughts. Walk me through things. Do we quite understand the damage done to the global economy and to global markets with a crude price near $20?
Okay, so there's a couple things there with oil and the global economy. Let me give you the bigger picture on U.S. economy, global economy. U.S. economy actually was in decent shape, but what occurred is the coronavirus ran headfirst into the U.S. economy, right? So it wasn't anything that we did internally, it was an external shock. And by definition, an external shock, eventually this too shall pass. With oil's a little bit more complicated because it's partially related to the economy, and it's partially related to what's happening with supply and what Saudi Arabia is doing. So it's not the best economic indicator at this juncture because of what's happening with some of the major players. And so we tend to look less at that and more at some other numbers to really get an understanding of what's happening with the economy.
What are you looking at the moment, Chris?
So the thing that we think is most important, and you know we've been very fed over the years, is what they did with the facilities and specifically with the credit facilities, right? So what happened, and getting back to the bigger picture, right? A lot of people will say this is a lot like 08. The difference between now and 08 is 08, the system broke, right? The system wasn't functioning. Banks' balance sheets were upside down and backwards. They couldn't extend capital. Credit markets were dysfunctional. People are underwater on their mortgages, and there's no price for risk. Here what we have is a system where the gears have seized up. You have that exogenous shock that's run headfirst into the economy. And what the Fed did with the credit facilities, they started to get liquidity where it needed to go. And what we saw in talking with our credit strategists is we had a record month in IG issuance in March. 2 weeks ago, that was unthinkable, really unthinkable. And the most important thing from all this is good creditors or good credits are getting access to capital at this point in time. And that means that we can start picking ourselves themselves up and moving forward. That doesn't mean the Fed's bailing out your risky players. That doesn't mean the Fed's bailing out your marginal players. What it means is the Fed is now making the system function, and now what we're doing is we're repricing risk, we're repricing the market, and credit is getting to the places it needs to go.
Chris, that's the good news. Let's talk about what that actually means for equities, though. For credit, that's encouraging. For these companies that want to tap the market, great. Last week, $109 billion worth of high-grade issuance, a weekly record. This week, 3 days coming into today, we had 36 issuers issuing around about $79 billion. 3 days alone, that's the second biggest week of issuance on record. Once again, good news that these companies are getting access to cash. My question, though, Chris, is as follows. These companies are building up debt again, and they're building up debt so they can get through the next several months because the economy has totally shut down. When they come out the other side, yes, there's going to be a lot of work to do to right-size balance sheets and to try and retain or maybe get back an upgrade in the credit market. That may well be good news for the credit investor again, Chris, but I struggle to see how that translates into a better equity price, a better equity market in the months to come. Right. If these companies are loading up debt for very, very different reasons than they were loading up 6 months ago.
Right. So companies are loading up debt for various reasons. Some are worried about the CP or the short-term funding market, and so they're going out and they're tapping the IG market for longer issuance. Right. By definition, that makes them a less risky entity. But let's talk really about the default cycle. Let's talk about the creative destructive process. We are going to run headfirst into a pretty healthy default cycle. If you look at high yield, and our high yield analyst said this to us, you're looking at default somewhere between 5 and 10%. Make no mistakes. This is going to be a tough time. There are going to be companies that are not going to exist in another 6 or 12 months. But one of the things that we've always talked about, and we talked about this on the show, is the creative destructive process never reached its natural end because too much liquidity was put into the marketplace by central banks here and abroad. And we had too much capacity. That's one of the reasons why we haven't had any inflation. Now what's going to happen, and it's a painful process, it's not a fun process, I don't wish it upon anybody, but the creative destructive process is going to occur, and capacity is going to come out of the system. Your good stewards of capital are going to be rewarded, and on the other side, they're going to be in much better shape, and they're going to be able to gain market share. And so, yes, there are certain companies that are loading up on debt. There are certain companies that are swapping one type of debt for another, but the survivors, I think, will be in much better shape, but not all companies will survive.
So, Chris, listening to you then, what I hear is that you've got to do a ton of homework right now, that for some of the more simplistic calls that I'm hearing on shows like this, not just on this network but elsewhere about buying the index, that for me doesn't add up, because when I speak to the professionals on the institutional side, on the buy side, the amount of homework they're doing on single names to work out the who's who and the what's what, Chris, it's immense at the moment. Can you just add a little bit more weight to that, a little bit more color about how much work needs to go into the process to identify the winners and losers at the moment, away from just an index level call?
Yep. So I'm going to stick at the index level, and then I'll come down to the more granular level. So what we've been telling people, and what we'll continue to say, is you want to be in higher quality companies, companies that have good stewards of capital, companies that have cash on the balance sheet, low leverage. That's a theme we've been playing for years, and that's a theme that we'll continue to play. And what we're telling clients is you don't want to get fancy at this point in time. What you want to do is you want to get exposure to these good quality companies, these growth stories, because ultimately when you bring rates down to zero, you can get a pretty attractive relative and absolute multiple, again, on the other side. What we're also telling them, in 6 months, that's when you really want to start putting risk on. That's when your deep value stories start to get really interesting. But again, we have to get through that default cycle. What people are doing in the conversations I'm having with individuals is, and which is really positive, because back in 2008, people were just saying to me, just make it stop and get me to the bell. I can't think, I can't look, there's no price for risk. Here's the real positive, and what you're hearing, what you're alluding to, is people are trying to figure out who the winners and losers are, and they're trying to figure out who's going to be hurt on a tertiary and secondary way, and who's going to be helped on a tertiary and secondary way. Listen, I don't think this is a time to do homework. What we've told clients time and time and again for the last couple of weeks, sharpen up your pencil, do your work. You're going to get the opportunity to buy some really attractive things. But in the short term, don't get too fancy.
Hey, Chris, I'm looking forward to catching up with you in the future as well. Send my best to the team over at Wells, won't you? Chris Harvey there at Wells Fargo. In this market right now, 10 minutes into the session, here is your price action on the equity market in New York City. The S&P 500 grinding just a little bit higher, up by 0.4%. We are going to have a must-watch interview in just a moment with Mark Kiesel of PIMCO, a conversation on global credit and fixed income that you really do not want to miss. It's coming up next from New York. This is Bloomberg.